Welcome back. You're watching Your World at 10 now. A year after being called Government Motors, following a high-profile Chapter 11 filing and a subsequent bailout, GM is back on its feet, posting a record profit in the second quarter and is now ready to go public again. Meanwhile, the two financial giants that were also bailed out, Citigroup and AIG, also seem to have turned the corner. So have the much maligned bailouts and the US government's ownership strategy been a success that nobody expected? Well, joining us to discuss that, Robert Guest, business editor of The Economist. Robert, thank you very much for joining me. I think the big topic this week is the General Motors IPO. I'd like to get your assessment of really how far you think that IPO is going to go in terms of being able to return some part of the immense government investment in that company in terms of a bailout.
Well, we don't know yet because we don't know how much the shares are going to go for, but the signs are really much more optimistic than anyone could have hoped for. When the bailout first happened, the company's been very impressive in dealing with its problems, very disciplined in reducing the number of brands that it's offering, reducing the number of people, shutting down factories, and generally emerging as a tighter and better company out of bankruptcy. So, a lot of people were very skeptical when the government took over the company, that it would use the company for political purposes, that maybe it would try to make the company turn out greener cars than people actually wanted to buy, or maybe that it would try and stop it from closing factories in politically sensitive parts of America. But it's been much more disciplined than people had a right to expect. So kudos to it.
Robert, I know that the full set of numbers is not out as yet, but if I remember correctly, GM had paid roughly $7 billion of the $50 billion loan that left the government with roughly $43 billion, which was converted into 61% of GM. Please correct me if I'm wrong there. And I'm told that the IPO is likely to be or likely to collect between $12 to $16 billion. That's only a fraction of the amount that GM really needs to pay back to the government. And it is going to be dependent over the next 2 or 3 years on additional such fundraising exercises for GM to be able to pay the US government back in toto, so to speak. Now, do you believe that the company has definitely turned a corner, or are these initial signs of success just initial signs of success, and there's no way to tell if the US government will in fact recover its money?
Well, the reason the amount of money it's likely to make with the first IPO is not enough to repay the government is that it's only selling part of its shares. It doesn't want to dump them all on the market at the same time. That would be an incredibly risky strategy because you don't really know with a company that big how much appetite there is for the whole thing. So it's very sensibly selling itself off in tranches, piece by piece, and therefore I think it's reasonable to assume that it will be able to repay most, if not all, of what the taxpayer put into it over the next couple of years. And there's even the possibility that the taxpayers might make a profit.
There were several skeptics that did not, agree with the concept of big government bailing out an industry such as the auto industry. Do you believe that they've all been quieted right now, considering that this has turned out to be a bigger success than was ever anticipated for the government of the United States?
Well, we were among the skeptics. We particularly as it was a new president and we didn't really know what his principles would be in this. But, we've apologized to him this week. He took a big risk, but it seems to have paid off. In principle, government bailouts are things that should be done incredibly sparingly and far less often than they actually are. They should involve only companies that pose a systemic risk, whose collapse would have knock-on effects that would be catastrophic for the economy. So it would apply, for example, to the financial system when it looks like that is going to collapse. And in the case of GM, it was a very, very big car company, and there was a very integrated supply chain in America, which could all have been brought down had there been a sudden catastrophic collapse. But the thing that the government got right was that it was very tough right from the start. It said, this is a bankruptcy process. GM was forced into bankruptcy. It's got to sort itself out. We're not going to just keep pumping in money and let it lose money forever. We're going to buy a big stake just to keep it alive. And then it's got to turn itself around, cut its costs, and emerge sustainably, emerge with the kind of model that can get by on a much lower, much smaller car market than it had previously expected. And it seems to have done that.
Absolutely. GM's turned out to be a pleasant surprise. Would you say the same for both Citi and AIG? Because I believe the US government has now pared its stake in Citi down to about 18%. Citi continues to be on the process, on the road to paring down several of its asset groups, especially at Citi Holding. And AIG, at the early part of this month, was reported to saying that it commenced discussions with the US government on the process in terms of a complete government exit. And AIG's Ben Moshe says, well, we are well within striking distance of completely repaying the Fed. It seems both Citi and AIG will also turn out to be not bad investments at all.
Well, I mean, both of those things were, bailouts that posed of companies that posed a systemic risk in the traditional sense of the term. If the financial system shuts down, the entire economy goes down with it. So the potential risk that the government was dealing with there was much greater than the risk with GM. So that was something where really the government did have to act, and at the time we too thought that was a good idea. It does seem that the government's pulling out of these, and that it's a lot murkier than GM. It's a lot less clear that it's gone as well, but it does seem to be going at least okay. The big area that you haven't mentioned, and where there's no sign of the government pulling out, is with the enormous housing loan corporations, Fannie Mae and Freddie Mac. The American government still standing behind something like 90% of the mortgages in America, and that's a terrible thing. I mean, that's something that, obviously they can't pull out all in one go, but that's something they will have to get out of eventually if any kind of sanity is to be restored to the housing market.
But isn't that something, Robert, that you would admit can only happen if, at a point when America is convinced of its recovery? It would be a very difficult political decision to make at this point, where there's all kinds of conversation with regards to the possibility of a double dip in the U.S.
Absolutely. I mean, at a time when you're worried about a double dip recession and it's a couple of months before an election, obviously this is not going to happen. But it's a long-term thing. The fact that the American government did so much to offer people a one-way bet on housing was a major contributor to the crisis in the first place. And so, we have to keep that at the front of our minds if we're going to wonder how to avoid crises like this in the future.
Robert, in 2008, 2009, a lot of the conversation was dominated by the specter of big government. Do you believe some of those fears have been allayed now, considering the kind of exits that the U.S. government is seeking in GM, has already sought at Citi, and will potentially work on at AIG, and eventually, hopefully, Fannie and Freddie as well? The worry about government getting too big, about bailouts being too risky, maybe all of that's been put to rest to some extent. This has turned out to be a successful strategy.
Well, I think in the narrow question of the bailouts, that I think the argument, the facts do seem to show that the government's got it right. In the broader question of whether the government's too big, that's still very much live. I mean, the proportion of the economy that the American government is spending at the moment is staggeringly higher than it was before the recession, and we don't really know how swiftly, if at all, it will withdraw from that. So that's a very big issue. I mean, you're seeing levels of spending that are closer to sort of traditional European levels, and in the long term going forward, that's going to be a big damper on growth.
So a final two-part question to you, Robert. The first part being that do you believe the relative success that the U.S. government's had with GM is going to help boost, to some extent at least, President Obama's popularity as we go into the congressional elections? And the second part of that question is, do you believe history will consider this bailout strategy a reasonably successful one?
I think that, yes, history will deem this to have been a reasonably successful bailout. Particularly, you've got to remember that the circumstances, particularly of the financial bailout, but also to a lesser extent of the GM one, where these were decisions that had to be made in haste at a time of crisis when all the options were bad. So I think that speaks very well of President Obama. Will it help him in the midterms elections? It'll help him a tiny bit. But the general mood in the country is tremendously hostile towards the ruling party at the moment, and that's largely a function of the fact that the unemployment rate is still high, and the recovery has been largely jobless so far.
All right, Robert Guest, we'll leave it there. Thank you so much for your time. It's been fabulous having you on the show. That was Robert Guest, business editor of The Economist, on Obama's successful bailout strategy. With that, we need to take a quick break on Your World at 10, but stay tuned because we're coming right back with the day's national and political news.